Q1 spending data is in the books, and it's a bit of a mixed bag. So what trends are shaping small business spending in Canada so far this year? What do they mean for day-to-day operations? And what strategies can business owners use to take advantage of or protect themselves from these shifts? Well, to help us answer these questions, I'm joined by Monair's consumer spending data expert, Sean McCormick. Sean, thank you so much for coming back on the podcast.
Good to see you again, my friend.
Now, Sean, you've been digging into the Q1 numbers, and at a high level, what are they telling us about small business in Canada so far this year?
It's a tough slog right now. It is a continuation of what we saw during the holiday season. And spending over the holiday season was down about 1%. And what we saw with Q1 in aggregate, right across the country, national spend was down about 0.5%, Q1 2026 versus Q1 2025. The important note there in terms of how to interpret this is that you need to consider that inflation ran at about 2% for most of last year.
Right.
So if the goods and services that consumers are buying all cost 2% more in Q1 2026 than they did in Q1 2025, then 0.5% pullback in total spend is actually a 2.5% pullback.
Right.
And in that regard, it's really hard to put a positive spin on that. There's a lot of pressures weighing on consumers right now. The political situation in the Middle East, with the strain on oil prices, the strain on diesel prices. So diesel is a really interesting phenomenon that not a lot of people think about. Diesel is really the heartbeat of the economy. When you think about the things that you buy every day, so whether it is the shirt on your back, the shoes on your feet, the tires on your car, the gas in your tank, everything is shipped.
Right.
Mostly everything is shipped, whether that is on freighters overseas or whether that is shipped on 18-wheeler tractor trailers across the country, across the continent. There is diesel baked into the price of everything that we buy. And take a look at the price of diesel the next time you drive by a gas station that offers both gasoline and diesel. Diesel is at its highest point in recent memory right now. So that's driving the cost of everything up. So consumers are forced to make difficult choices right now. And what 0.5% decline in consumer spend Q1 2026 versus Q1 2025 says is that consumers not only are they not prepared to pay more for things, they're actually starting to spend less overall.
Right. That's bleak. Now, while overall spending seems to be down then, not every segment is performing the same. Which sectors would you say are, off to better starts than others?
Yeah, travel and entertainment seems to be resilient. And, when I say resilient, that means that, more dollars are flowing through the pipes, our pipes at Monaris. So when you see categories like airlines and entertainment both up 11%, that's an interesting sign. When you think about an 11% increase, you ask the question why that might be.
Right.
Go try to book a flight online right now. That'll tell you everything you need to know about why that volume is up 11%. In terms of entertainment is classified as things like movies, golf courses, things of that nature. An 11% increase year over year. Yeah, it's notable. It's actually a bit of a beacon of hope for consumer spending when you see those categories up. But I would attribute the airline increase to the cost of airfare going up.
I mean, it's counterintuitive, right? I mean, those two seem to be the first things that people would cut back on, when times are tough. So there seems to be a bit of a conflict between sentiment and reality. Now, you're right, like airlines, if the price of fuel skyrockets, that could account for that increase alone.
Right.
But yeah, the entertainment numbers is interesting. What are some of the segments that are not doing as well?
It's the non-essential. Outside of airlines and entertainment, generally non-essential spend is not doing well. In particular, it's impacting restaurant spend. We commissioned a survey recently by our partners at Angus Reid relating to consumer spend, and one of the questions we asked is, Do you expect your spending on non-essential items to decrease over the next 6 months? And 43% said yes, they do expect that to happen. And that doesn't mean that the majority said that they didn't. It was broken out into 6 different categories of I expected to, I'm not sure, I'm quite sure. 43% said they expected to. That's considerable. And restaurant spend and restaurant takeout ranked as the highest non-essential items people were likely to pull back on. So some headwinds for the restaurant industry continue probably for the next little while, at the same time as the inflationary effect is going to impact the cost of the goods that those restaurants buy to put on the menu to sell to consumers.
None of that is good, especially as we head into the warmer months and peak tourism season. What, if anything, does this, we already hear, restaurants are going to have some headwinds. Again, travel, though, seems to be up, but that could just be the cost of it. What does the tourism season look like this year?
Well, here's a little bit of good news is that Canadians are more likely to spend their tourism dollars at home again this year. Last year, with the tariff anxiety and the political environment with the US and the cost of the exchange, like the exchange rate was just awful in the first half of 2025. More Canadians spent their tourism dollars at home. And we saw that where interprovincial tourism spend was up anywhere between like 3 and 8% across the country. We expect that will happen again this year based on some of the survey results that we're seeing. 29% of Canadians responded saying that they expect to travel less to the US this year than they did last year. And last year, when we asked that question, a quarter of respondents said that they were going to boycott travel to the US and spend in the US. So that trend seems to be holding, if not even accelerating a little bit. So that's good news. The summer tourist season is really, really important to merchants right across the country of all shapes and sizes. So if Canadians choose to stay home again this summer en masse, then that bodes well for summertime spend across the country.
Yeah, well, I can tell you for my family this summer, the big trip is PEI. So we're part of that statistic for sure. Now let's talk about geography. Now, how does spending vary across the different regions of the country? And are there any regions doing better than others?
Yeah, well, when we look at Q1 2026 to Q1 2025, there were no breakout provinces. As I said, nationally, spend was down about 0.5%. If we look across the country, the brightest spot was Alberta, where spend was up 1.25% versus Q1 2025. Again, adjusted for inflation, though, at 2%, that's still realistically a bit of a pullback. But relative to the rest of the country, provincially, Alberta was the bright spot. The biggest pullback was in Manitoba, down a little over 2% Q1 2026 versus Q1 2025. And adjusted for inflation, that's getting into some notable numbers. That could be around 4% when you include inflation. So Alberta may be the bright spot, and Manitoba probably having the toughest time. But I would say that last year, when we looked at domestic tourism, getting back to the good news tourism story, is the prairie provinces tended to benefit the most from the shift to domestic tourism from international tourism for Canadians. So perhaps the folks in Manitoba have some brighter skies ahead.
All right. So based on these findings, what practical advice would you give small business owners for the rest of 2026?
I would say get back to basics. And basics for any retailer around the world, it's not just Canada, is the customer experience. Give the customers not just a good experience, give them a unique experience. So customers should expect a good experience, and you should expect to give your customers a good experience when they walk through your front door. But the unique experience, if it's a good one, is going to be the experience that's going to bring those customers back and make them a return customer. The unique experience is also going to influence their customer behavior and is going to induce them to spend money when they're in your store. So if you're a restaurant, people are coming in, they're hungry, they're going to eat. If it's a great experience and they're happy and the endorphins are pumping when they're in there, maybe they're going to buy a little bit more. If it's a good customer experience in retail, let's take apparel, for example. If it's a great customer experience, a unique customer experience, they're going to leave the store and they're going to tell everybody else about it. They're going to tell their friends and their acquaintances. They might even go on social media and talk about it if you're lucky. So back to basics. Remember the customer experience, because it's that customer experience that is going to lead to those return purchases.
That's all good advice. Now, for listeners who want to dive deeper, where can they find the full report and learn more about Moneris Data Services?
MonerisDataServices.com, my friend, as always.
All right. Well, thank you so much for joining me today, Sean. Looking forward to maybe talking some NHL playoff talk next month.
Yes, sir.
All right.